Last week, retail investors decided the AI trade was dead. Micron dropped 13% in a single day. Across investor feeds, one verdict just kept coming back. The AI trade is over. But look at what happened while everyone was selling. Two things. Two Korean giants. On July 7th, Samsung posted second quarter operating profit of 89 trillion won, roughly $58 billion, up more than 1,800% in a year. That made it the most profitable company in the world for the quarter, ahead of Nvidia and Apple. And the second giant, the company leading the most important memory in AI, made its Nasdaq debut on Friday, July 10th. The crowd was watching prices. The biggest money in the world was watching supply. Now here's why memory decides this race. Every AI chip is a brain, and a brain is useless if you cannot feed it. That feeding happens through a special kind of stacked memory called HBM, high bandwidth memory. It is brutally hard to make. Only 3 companies on Earth can produce it at scale. That is the entire global supply of the one part AI cannot run without. And that supply is already spoken for. HBM output is pre-sold years ahead, locked under contracts running into 2027. This is not a hope trade. The demand is signed. It is so strong that right in the middle of the sell-off, the memory makers did the opposite of panicking. They moved to raise third quarter DRAM contract prices by up to another 20%. Companies do not push for higher prices into a crash unless the shortage is real. Then came the quiet part. The part most sellers never noticed. That second giant has a name, SK Hynix, the memory leader that just made its Nasdaq debut. It priced at $149 a share, raising $26.5 billion, America's largest ever listing by a foreign company. And before a single share traded, 3 of the sharpest names in the game publicly stepped up for as much as $7 billion of it. Situational Awareness, the fund of Leopold Aschenbrenner, the researcher behind the decade's most famous AI forecast, Coatue. Baillie Gifford. Money like that does not step in during the middle of a crash because it thinks the story is over. So which memory maker do you actually own? Samsung just proved how much money this shortage can print. But Samsung is a sprawling giant. Phones, displays, appliances, chips. Buy Samsung, and the memory win gets diluted by everything else. Micron is the American pure play, the one we covered on this channel back when it traded near 10 times earnings, which leaves the company you already met, SK Hynix. It leads the exact product this whole story runs on. The #1 maker of HBM with about 60% of that market and the most coveted customer in AI. And until Friday, it was the one name on the podium you could not simply buy on a US exchange. Not anymore. The company now trades on the Nasdaq under the ticker SKHY, priced at $149, and it jumped 15% on its first day. The scarcest layer of AI, in its purest large-scale form, is finally one click away for American investors. Now here's the part that should really get your attention. Memory, including SK Hynix, is the fastest growing corner of the semiconductor world right now. Yet Samsung trades near 5 times forward earnings and SK Hynix near 6. Now compare that with the AI chip designers' memory feeds. Nvidia sits around 23 times, AMD around 25, Broadcom near 30. Same boom, same supply chain. Yet the layer facing the tightest shortage carries the lowest price tag. And the profits behind those low multiples are anything but small. KB Securities projects SK Hynix alone will earn 358 trillion won in 2027, roughly $235 billion. That would rank it among the top 3 earners on Earth. The same forecast puts Samsung at 488 trillion won, past Nvidia's own consensus. Wall Street is only beginning to reprice memory as a growth business. That gap is where the opportunity lies. 2 pushbacks. Because they matter. First, listing into a crash looked like terrible timing. So look at what buyers actually did while the crash was unfolding. Around 1,000 institutions worldwide crowded into the roadshow, and the books came back oversubscribed several times over in the ugliest week of the year. The 3 big names did not step back either. Their $7 billion interest, about a quarter of the offering, went public that same week with their names attached for everyone to see. Then Friday came. The market gave its verdict. The stock jumped 15% on day 1. The crash could have handed the smartest money a perfect exit. Instead, they showed up and bid. Second, the old critique. Memory always booms, then busts. But every old bust started the same way. A flood of new supply. That flood cannot arrive when output is pre-sold into 2027 and the makers are raising prices instead of racing to overbuild. So let's put the pieces together. The scarcest part in AI has exactly 3 suppliers, and its output is pre-sold into 2027. Its makers pushed for another 20% price hike in the middle of a crash. That is what a real shortage looks like. The number one maker just opened its doors to American money through a $26.5 billion listing, priced at a premium to its Korean shares and claimed several times over. And the whole layer still trades at a fraction of the multiples of the chips it feeds. Supply, contracts, entry event, valuation gap. Every piece points the same way. That is why SKHY belongs on your list. Not because it is new on the Nasdaq, but because what it sells is sold out for years. A re-rating story you hold, not a headline you chase. Last week, the crowd watched prices. The money watched supply. Which leaves the last question. The moment you finally can own it, what is the best way to? Already trading on Ondo and X stocks. Through a broker, you trade market hours only. On-chain stocks trade 24/7, 365, straight from your wallet. We prefer on-chain for one reason above all. Your profits stay yours, untaxed, not financial advice. Do your own work on the price you pay.